So, welcome everybody. Welcome to the first on my channel of a weekly price action journal. So, as you may or may not be aware as of yet, my channel is dedicated to focus on the improvement through journaling and how we can not so much expedite the learning process, but we certainly can take great insight into our patterns and our behaviors through the things that we see in price action to evolve, to improve. And journaling is the number one tool or process, if you will, in my opinion, to consistent improvement. By being able to be self-aware, self-critical, self-analyze one's performance and observations from a week of trading, identify areas of things that maybe you saw or did not see, and where there were potential areas for a potential trade to ensue. Now, all of this is, is primarily related to your model. I've tailored mine over, many entries of journaling where I have my model, and now my weekly analysis is tailored around my observations of the market naturally, but also to specify where there were opportunities, whether I did or did not get involved, is partly an element of identification, but it's not the only thing. The key thing is to be able to look at price now from a position of analysis and look at the key characteristics and patterns and signatures that occurred, and how I can do a better job moving forward from the things that I've taken from this week and previous weeks to continue to improve. So this is an element where we can look at progress through journaling, and I'm going to take you through the journey of how I journal and carry out a weekly price action journal. So this is going to be raw. It's going to be recorded, yes, put onto my YouTube channel, but I'm not going to edit anything. This is typically how I tend to do it. And again, the art is to make mistakes. The art is to have critical thinking, to look at things and challenge yourself. Was that correct in the moment? Looking at things the way I saw this, was that correct? But ultimately, you want to be doing this in a top-down approach. So this is my comprehensive way of journaling. Hopefully, you take something away from it. But for now, let's get into it. So the first thing I typically tend to look at is the economic calendar, as we can see here, and based on the economic calendar, what were my likely observations at the beginning of the week? So for me, I'm going to be narrating as we go. So based on the economic calendar, and based on my model, I was anticipating that the high or low of the week would likely occur on Thursday. This was because Thursday had the majority, or should we say Thursday had the highest number of high impact news drivers or events, if you will. during the week. So therefore, I'm looking at that, and I'm qualifying and quantifying that by saying, well, there's a likelihood that there's going to be a larger volatility move, a larger injection of volatility on Thursday based on the two high impact news drivers in relation to USD. Furthermore, following Monday's bank holiday, I would be anticipating a potential setup to form on either either Tuesday or Wednesday. More specifically Tuesday, because again, as a high impact news driver, but does not mean that it could not occur on Wednesday and we have that delayed volatility into the market. So that's my brief narrative, just very brief narrative for the economic calendar. So my next heading will be the daily chart. Okay, so let's see what we've got on the daily chart. So let's swing out to the weekly a second, just to so hold high, current cycle, it's going to be there. Now again, I'm not going to go into, why have I labelled this, and why have I labelled that. That's not important for the session. What's important is however you look at the market, however you identify key POIs, and areas that you think are important to you. It's important that you transpose that into your document, into your journal, in a way that makes sense to you. Okay. So we do have a weekly BISI here, and we also have the balance price range here, which I will mark up the balance price range down here. Now again, not anticipating that to be called into play, but for me it's just a reference point that I know why ultimately I'm looking at what I'm looking at, just on this time frame. So that will do there. So looking above the market first, noted that SIBI as a key inflection point. And as we can see on Monday, how price tapped into CE perfectly before rejecting lower. Okay. So they're the key PD arrays above the market. Yeah. Okay. So we've got this. We've got this BISI here. Let's go up to here. So you want to take your time doing this. It's not a sprint. There's no medals being handed out. It's about being as accurate and as meticulous as you can be. I'm saying it has to be perfect because we evolve. Okay. Now, although a move potentially happened at the lows here, I wasn't classifying it as high probability because of where it's formed in relation to the true month open. I would want to see that below the true month open for that to be high probability for me, but I'm fully aware in terms of the location of where price is. So I'm going to mark that up. Okay. It was Monday. Okay. Now, there's not a lot for me to, I could mark this up and this here and so on, but in terms of where price is, it's primarily what's important to me in relation to in relation to price, current price action. So we have a purge here, which I'm just going to mark up. Okay, and one thing that I wouldn't typically mark up, because I tend to not get too obsessive on the left side of the curve, when we're clearly framing here a market maker buy model. Quite clearly, that's the market is now in another phase of reaccumulation before it's likely going to expand higher to seek the buy stops above this high. But people would say, but we've overrun this this imbalance. Now, to me, we haven't for one key reason. Bodies of the candles, in my opinion, have closed inside of the inside of the BISI. If you notice here on Wednesday, candle closed outside, and then we gapped down, and immediately retraced and closed back above. So that to me highlights that price is respecting this BISI. And then on Friday, naturally, price expanded higher. Now, if you wanted to bring in the left side of the market, which again I'm not, but just for the purpose of this, I'm just going to highlight it. You do have this mitigation candle here, and if you draw that out across, you'll see that price. Well, let me just do that now. I'm not going to keep it on my charts because it's not important to me per se, but if we did that, you can see how price has respected that level, right? And so that just re-emphasized to me that we're at key level. We want to see this area mitigated, and the likelihood of a move ensuing from this area, if we get the right signatures in price action around the immediate price action, this just added, it was an additional confluence that would support the idea of price potentially moving higher. Okay, so I'm going to move that. That's the daily chart as far as I'm concerned. I'll get into more specifics. True month open would have been down here, so that's why for me this wouldn't have classified as high probability in my book, but many other traders would have done that. But nonetheless, let's stick to, topic. So So following last week's PA, I had noted how price had traded from the BISI to the SIBI daily, consolidating within that range. Sorry, within those two PDAs, right? My anticipation was that we would see manipulation at the lows within the BCD, which is internal range liquidity, and then seek the buy stops above the old high. This was supported by IOF and institutional sponsorship relative to this time frame being to the upside, where I had previously noted how bullish fair value gaps were being repriced and rebalanced. Sorry, actually, no, tell a lie. Were being left unfilled, supporting the idea of price seeking liquidity quickly. Okay. So so that's pretty much it from a daily standpoint. So ultimately, I'm highlighting the fact that we were between two PD arrays, BISI, SIBI. By anticipation, there was manipulation at the lows to attack internal range liquidity, external range liquidity. We've got external range here as well on Monday, but prior to Monday, I'm looking at price to target the highs. Okay, so dropping down to the 4 hour. Okay, so okay. So we have what am I doing? Thank you. So SMT with NQ there. Okay. So we had what I like to do is, not sure why. So we had that was Friday's high, Monday's high, Monday's low, Tuesday's low, Tuesday's high, Wednesday's high, that's Thursday's low, Thursday's high. Okay. Copy that. So we had SMT up here as well. So I want to mark that in. Very shallow run, but nonetheless we had it. In fact, before I put those in, let's let me put so that's previous day's high, Monday. Okay. I like to just overlap that by one. Just makes it cleaner when you drop down to a lower time frame. So as we can see here, it's where Q1 was purged. I'll grab that. Okay. And lower the week here. And by all means, you can, if you want, either just put low of the week, like so, just for reference. And we know that that was the high of the week, so you can do that if you choose to. I tend not to because I'm fully aware that it is the low of the week. So then we've got the highs. This is where it might get a little bit, so I'm just going to stretch this out a tad. Okay. And then we've got just in here, like so. Now, we could use purge lines. Fact, I think I will use purge lines. It would just make it yeah, I think it would just make it just a little bit cleaner, so I'll do that in a second. Let's just get the lines, the key price levels up. Okay, so I think, and then we've got one more. Which we probably won't see that in a minute, but nonetheless. Okay. So what I'm going to do, so as I said, you won't see that. You'll see this one. Okay. Just to take the harshness away. That's the reason why I'm doing it like this. Just to emphasize the fact that they were purged. And then it doesn't become too overbearing on the chart. Okay. And as I said, noting the running out of space here, but let's continue. Okay. What we've got here is fair value gap. Which ultimately was violated here. So we're just going to pop that across to there. Okay. So that was key. I think from a H4 standpoint, I mean, we did have, should really mark this up as well. Okay, so the BCH4, we've got another one here which remained, and by all means we can classify this one here. Okay. So we have some of these key, let me just make that a little bit larger. Some of these key levels. Okay, so immediately I can see that my high probability model would have formed on Monday and Tuesday. Monday and Wednesday, but I don't tend to trade Mondays. The most important factor that I need on here is key to my model. True week open there. Okay, so this to me, from a 4-hourly chart perspective, looks complete. I've marked up the key swing points that are important to me. Key fair value gaps where had particular focus to be during the week. And I think that is pretty, it's pretty sound. There was sort of something that could have ensued here, which we might look at on the hourly. On Friday. But would have been the PM session. Okay, so I'm looking to take that on. So as detailed in the daily time frame, I was primarily looking for higher prices, targeting the old high of the marketplace. Okay. Let me just get my bearings. Okay, so relative to the previous true week open, which would have been on that candle there, the market formed a high time frame SMT at the highs, which was responsible for the high time frame displacement lower, which ultimately set the low of the day, and that day would have been Monday. Okay. The market retraced back up into the CB H4 with the bodies of the candles not violating the high. This was an algorithmic signature supporting the idea of further lower prices. Okay. Then Wednesday, which we'll go into more detail. Wednesday, the market purged the previous day's high, whilst also being above the true week open within the CB H4, supporting the idea of a high probability short purging the sell stops below previous day's low. Okay. Okay. Let's just add to that sentence. Market traded down to the down into the BC daily, purging Sell stops below the old low. Yeah, the old low. Okay. I then noted a time frame SMT lows. Just going to make a note which I qualified as low probability due to its location relative to the true month open. So again, this is how I internalized price coming into those days. Others would have internalized price as high probability because we are in a market maker buy model. We're inside of a daily BISI. That's high probability to them. It's just low probability to me. That that's just how I look at things. However, from a directional bias standpoint, it supports the idea of higher prices. I just wouldn't take a trade off it. That's what I'm. When I classify something as low probability, it means in my mind it's not something I'm going to frame a trade off. It doesn't mean that it can't be responsible for the next leg of directional bias. If it is the next leg, I'm going to find a high probability setup within my model within that leg. But as it constructs that SMT with its location to various other criterias that I've set for my model, it's not high probability, and therefore I won't frame a trade off it. Okay, so I just want to make very clear that distinction. That's just for me, and that's what I'm detailing here. Okay. Okay. Which set the stage for higher prices. I've made a spelling mistake there. Let's just make sure. Let's keep things. Just wanna. Okay, so like I said, just really focus on how I'm collating my information. I know it's long, to some it's long-winded. There's a lot of critical thinking. I'm constantly thinking about what I'm writing. We've got to be very intentional with what we're putting in here, because this is what's going to elicit the elements for us to study, for us to learn, for us to perfect, for us to improve. That's why I'm sort of taking my time through it, but I'm also challenging my thought process at the same time. It's important. It's important. It's how we then start to layer our understanding of certain things, or highlight the areas very clearly of where we need to go, and either delve a little bit more into, get some more raw data that can support or negate a theory or feeling that we have in relation to price. They're all important. Okay, so I think from for high prices, seeking liquidity above the previous day high Q1 and then the old high. Okay, so that's what I'm looking at. So ultimately what I've detailed in a nutshell is the fact that there was a high probability setup here in relation to the previous True Week Open, but I don't trade Mondays, so for me this is not something I would have engaged in. Market display slower creating this SIBI. The market traded back up into it, respecting the SIBI bodies of the candles, not violating the high of the SIBI, and within it formed SMT, which supported with price above the true week open, supports a high probability setup for me trading lower. Okay, and then the market ultimately traded lower, purged the liquidity below this old low. There was SMT here with YM. The market ultimately validated this. Again, I've emphasized why to me this was low probability, despite the fact that it did reprice high. It was low probability for me, and I would have looked for a different type of setup along the way, but nonetheless repriced higher, purged the SIBI, institutional order flow and institutional sponsorship clearly bullish in terms of how price relative to the daily time frame responded, reacted within the BISI. We can see here as well how price traded back down into this BISI here, respecting it. What is the candle's not closing in? Then it did. Wick down, that's fine. Wick's doing the damage, and then ultimately the expansion higher to close the week, closing above the true week open for a bullish week. Okay, so we're going to take a picture of that, pop that into the journal. Okay, so you've heard me narrating. Everything that I've narrated out loud is what I'm typing in under the 4 hour chart. That's what I'm typing in. There's nothing that I'm doing outside of that or what have you. What you're hearing is what I'm typing in. Okay, so now we're going to drop down to the 1 hour chart, and we're going to get a little bit more granular in here. Okay. There we go. Right, so let's get this nicely across like so. Expand this higher, not too high. Okay, perfect. Let's clean some stuff up like that. Get all of these key levels in like so. Okay, so I'm going to start on Monday. What have we got here? Oh, hang on. Hold on. There we go. So, start on Monday. Okay, so let's just, now I do want to emphasize these, so I'm not going to lighten them, I don't think. There we go. Okay. Just looking at, I'm just getting the key hourly liquidity pools that were ultimately important to me. Yeah, that's all fine. We have got, that's important. Let's just enlarge that, and let's enlarge that and just draw that in like So that ultimately became an inversion fair value gap if it was used. So I'm just going to mark it as that. Let's drop this back down. Okay. So, a question I will answer. Ask them here, why is this an inversion fair value gap, or why is it important? It's important because the market traded down to it, clearly found support, bodies of the candles didn't close inside of it once, twice. Then that initiated price to reprice higher and purge the liquidity above the London high, right, which set the high. So this was responsible, this PDRA was responsible for price purging this liquidity pool. So when price trades down, so they've accumulated longs in here. So when price trades down, this is an area that could be revisited for mitigation. So it's important to me. So if price was to trade back up into here, I would expect this to hold price, resist price for a continuation lower. Okay, so that's why that's important to me. Okay. I will just mark. Let me just actually. Let's just copy that. It's easier. Right, I could do with the drink. So I am going to quickly go and grab myself a drink. I will be right back, so please don't go anywhere. Okay, so I'm back. Right, so we're here. Okay, so we did purge. It's just a universal, but it's a H1 purge there. We did also have a purge here, so that supported the idea of this trade being high probability. Multitude of reasons. There's a tiny version fair value gap in there, very tiny, but better emphasised than the M15. But we're not going to go down to the M15. market then repriced lower. We saw it trade back up into here, like so. Okay, and that CB is just important because, again, there's reaccumulation that took place in there. Shorts. I actually want to change that. Just make it a little bit more clear. Okay, right. Just realised something I didn't mark up, but I'll do it now. In fact, I'm just going to drop back up to the 4 hour just to do it on there. I think it'll be a little bit easier. I can do this one from here, but do the rest from the 4 hour. Call that SSL or an old low relative to the 4 hour. Okay, I think it's just that one. That's important to me. Yeah, it was just that one. Okay. So that, was a set up into the PM session there. Okay, so just going to make a note of that. Right, so and we will make a note of that purge, because that's a H1, which is important to me as part of any model. Okay, so now I'm going to mark this. Now, could take this one. In fact, if you took this one, it's fine. Because within here, there's an M15 high probability order block, which is what I would have taken. But if this one actually engulfs them, so you could take that one, and that'd be fine. This one actually. It's bloody wrong colour. Let's just get that right. There we go. Perfect. Okay. There's those. I've got a breaker here. That's important to you. I have missed something in there which okay. Reaccumulation took place in there. Let's trade. Not quite finished yet on the hourly. Still got a bit more to go. Okay. Here we go. Perfect. Grab that. Yeah, I guess we, yeah, actually I will use the others. Just makes it stand out a little bit more. Okay. Okay. And that one in here. Just going to update these. Okay. And this one has an inversion. Okay. Right. That's looking pretty good in terms of my outlook for. That's one final thing that I need to do. I think this was primarily applicable to here. Geez, my fans are completely whirling. Not sure why. Okay. So that is pretty comprehensive outlook. So the only other things to add now are high impact news, drivers, which were Tuesday, Thursday, and Friday. Friday was 8:30. There. And And for reference, I want to know what the weekly range was. So from here, 107.75. So you want to capture that. It's important. Okay. So ultimately, it was a Thursday low of the week, but it was a consolidation. Sorry, a Wednesday. Well, it classifies as a Thursday low of the week because we're looking at, true open. There'll be a Thursday low of the week. So consolidation, Thursday reversal, as far as I'm concerned. And I still think that price wants to draw up to the old high. Okay. So now to the hourly. This is where it gets a little. Sorry, just want to emphasize something. Yeah. So much there. Probably here. So what I'm doing here is just referencing this day, my model. Okay. And yeah, primarily there was a model here. I'm not gonna lie, there was one in here. But it's kind of one of those. It is my model, but it's not at the same time. So I'm not going to classify it as it is. I'm just going to leave it as a, yeah. That, put it this way, the trade setup in here for me would not be as high probability as this one. But it is something that, I will look at. In fact, I'm going to mark it in there because it's something for me to evaluate, to see whether this is of something that I could look to incorporate. In the moment, I wouldn't have capitalized on this, but it's something for me just to take away and have a look. So primarily, this was the model. This was the move for me for the week. So that is my chart. That's how I look at price action. So I'm just going to and what we can see is how price meandered and navigated during the week, how it consolidated, and ultimately we got two large expansions towards the middle of the week, and then a further expansion to end the week. So now that we've got the chart complete, I typically now document just in a couple of sentences what happened on Monday and Tuesday. Monday throughout the week. Just grabbing a quick drink. Okay, so Monday, the market opened. And began to reprice higher above the true day open, with price already above the previous true week open. The market purged the previous day high, whilst also setting the BSL London, so the London high, before repricing down into the BCH1, accumulating further longs, before repricing higher. Before repricing higher to purge the BSL LDN and set the high of the day. The market also formed high time frame yes, the market also formed high time frame SMT at the highs before displacing lower to form the low of the day. Okay, simple as that for Monday. Okay, Tuesday. The market opened, repriced up, the market opened, repriced above the true day open and into the CBH4, setting the London session high. Okay. The market then repriced lower, purging purging the previous day's low before finding support and repricing higher. Hold on, I've missed something. The market repriced lower below the true week open before purging the previous day's low. True week open, purging the previous day's low before finding support and repricing higher back above the true week open and into CBH4, setting the high of the day. So pretty much Tuesday, so I'm just going to make a note. Tuesday was a seek and destroy profile. Okay. Quite clearly, we can deduce that based on just that narration alone. Okay. So Wednesday. Hang on. Setting the high of the day before repricing back into the daily range. That's better. Okay, Wednesday. Market opened above the true day open, consolidating within the CB H4. The market then purged the the previous day's high, setting the stage for a high time frame SMT above the true week open, which was validated and confirmed by the bearish high probability order block, confirming the CSD. Okay. It's a general, okay? The market then displaced lower. Yes, there is the low time frame SMT, etc. But the general is we created the high time frame SMT and the market displaced lower. Okay, so yes, the market purged. Market then purged the, I should say, the London session high and the previous day's high. Set the stage for a high time frame SMT above the true week open, which was validated and confirmed by the bearish high probability order block, confirming the change of state of delivery. The market then displaced lower, purging the sell stops below the previous day's low, expanding lower into the BC daily. Okay. Ultimately, that's where the low of the day occurred. Okay, so that's primarily as an overall. We only need a couple of sentences, 2-3 sentences. Nothing. Sorry, sitting away from my mic. Nothing too. You don't have to be overly detailed. Well, you can be as detailed as you want. In all fairness, you can be as detailed as you want. For me, I like to take a general overview of the hourly chart in terms of what were the key things that happened, where did price start, what happened, what initiated it, where did it go to, what did it purge, that sort of thing. Okay. Right. Thursday. Okay. The market opened below the true week open. But immediately repriced higher above the true day open. In fact, it didn't reprice, it displaced higher above the true day open. Okay. There is this in here, which is actually important. Grab that. Okay. Where are we? The market violated the SIBI H1, trading to and through before finding support at an overlapping BISI H1 and then displacing higher, purging all the liquidity above the market engineered during the week to form the high of the day. Okay. Where we form the high of the day at the BC. It's not BC. SIBI daily low. Okay. The market then sold off back into the daily range to close the day. Okay. So we're going through this. That's Thursday. Okay, Friday. Admittedly, I wasn't in front of my charts on Friday. So part of that displacement higher on Thursday formed these two 4-hour fair value gaps, which ultimately became important on Friday, where the market found support. So Friday, the market opened and repriced higher, or should I say displaced higher, during the London session. Bear with me. Okay, sorry about that. Right back. So the market opened displaced higher during the London session. I then noted the retracement back into the BC H1. Before market continued to reprice higher, setting the New York session high. Okay. This occurred inside the CB H1. I haven't marked up the CB H1. I'm aware of it, which is right here. I haven't marked it. Because wasn't that important to me at the time, and besides, I wasn't trading Friday, but that's by the by. The reality is I'm aware of that, but the key thing was the liquidity pool sweep more so than the than the imbalance at that point in time. At that point in time, I did, the hourly CB wouldn't be enough for me to formulate a trade. That's why it wasn't important for me. Okay. Yeah, it would need to be a high time frame PDRA. Okay. So following the high impact news driver, the market displaces lower below the true week open and true day open, setting the stage for a high probability long. The market then purged the old low H4, high time frame PDRA, inside of the BC H4, another high time frame PDRA. So now we've got some overlapping confluences after also purging a H1 liquidity pool. Okay, so we've got the BC high time frame PDRA, H1 liquidity pool, H4 old low, H4 here, where then formed high time frame okay. This set the stage. No, sorry, I don't need to write that. Okay, so let me just recite that saying. So following the high impact news driver, the market displaces lower below the true week open and true day open, setting the stage for a high probability long. The market then purged the old low H4 inside of the BC H4 after also purging the H1 liquidity pool, where it then formed the high time frame SMT. Okay. Important to note that the bodies of the candle did not violate the liquidity pools, which was a signature supporting the idea of higher prices before the market then displaced higher, purging the New York session high to close the week. Okay. And that is how I detail price action per day. So we started off with the daily with a more of a narrative in terms of what we were anticipating. Dropped down to the 4 hour to determine more around institutional sponsorship and order flow, and high time frame PD arrays as well, in which we could get more specific with high time frame PD arrays in terms of what we wanted to see, the things that mattered to us and were important to our models. And then we drop down to the hourly, where we get very specific and granular in terms of what was occurring on each day to support our trade idea. And ultimately, we want to highlight where our high probability setups would have occurred, depending again on the time frames you use for your trade. So you don't have to use the hour, how I do it, daily, 4 hour, hourly. You can drop lower. If you drop lower, you probably want to disregard the daily and 4 hour and probably spend more time doing individual daily chart markups. But that's something else we're going to get into during the week, which is going to be the daily PA journal. So there's two. There is the weekly PA journal, this one, and we build that during the week through the daily PA journals, which I'm going to get into with you guys this week, anyone who watches the channel. So now we want to take a moment to highlight any key takeaways we had from the week. So during this process, any notes as well, coupled with any notes that you made during the week, and during this process where you've taken a step back to look at price action, what were your takeaways? Okay. So one of mine was to carry out my daily forecast each morning to determine the possibility of a high probability trade. Now, as silly as that sounds, typically when there's days with no news, I don't trade. But it doesn't always work out that way, where days with no news, if it's in the middle of the week, is part of probably the weekly expansion. Therefore, there's an opportunity potentially. And remember, when there's no news, it's one of two things. It's either we consolidate, or we do get a volatility injection. We just don't know when. Okay, so always bear that in mind. Okay. Okay, so that was one of my takeaways. Let's carry out my daily forecast. Just to determine the possibility of high probability conditions, then we can kind of go on from there. Okay. So take the time, this moment, to just go through your weekly journal. Okay. Just going to whiz through mine. Okay. Okay, so that, my friends, is how I do my weekly price action journal, my weekly review. Specifically, this was for ES, but by all means, do it for whatever primary market you trade. If you trade multiples, then my advice would be you carry it out for all of the markets that you've ultimately taken a trade. If they're heavily correlated, so i.e. you trade EU and you took a trade on EU and GU, you probably would get away with just one of them because they're correlated. But if you traded EU uh, and um, and dollar yen or something like that, um, then you probably want to do both. Or maybe you traded an exotic or something along those lines, then you're going to want to do both. You're going to want to have two entries and it's comprehensive. And this is important. Like I said, we've got to stop thinking about the time. How long is it going to take? Oh, I've got some. If you've got something else to do, then you're not serious. This is important. This is where you stem growth. This is like the footballer, the aspiring footballer who doesn't just wait for football practice on a Wednesday or a match on a Sunday to perform. They're in the back garden and they're practicing against a wall. They're practicing all their different footballing techniques, whether it's passing, control, all of the above. They're practicing when the lights are off. That's where success is built, when the lights are off. It's the same way a bodybuilder, coming out onto the stage of the Olympia. He didn't win the Olympia just. He didn't win the Olympia on stage. He won the Olympia, busting his tail for weeks upon weeks upon weeks on end, getting into the perfect condition when the lights were off and nobody was watching. That's what this is, and it's super important that a lot of focus is applied, a lot of intentionality in terms of what you are writing. Now, ICT always talks about God, what's the term? Somebody will probably put it in the chat. Where it's essentially positive reinforcement, self-talk, positive self-talk, and it's important when you're doing this. Even if you did not take the trade, write the analysis as though you did. The things you spotted, the nuances, specific to your model. That's going to build confidence. So make sure you take the time to do this whilst it's fresh in your minds. You go top down of all the key elements that you require. Now, when we come to do the daily price action journal, that's going to be more specific to the model, even more specific to the model. It's going to be, we're really going to delve into that. So, anyway, I hope you found this useful. I hope there was things that you could take away from this. I know it's a long form, dry video, but this is how it is with me. This is what you're gonna get. It's just the raw form. I'm not gonna sit here and sugarcoat anything. I'm not gonna heavily edit. To be perfectly honest, I haven't got the time. I don't have the time to be sitting here cutting videos and all of this sort of business. So you're going to get it in the raw form. You're going to get that critical thinking. You're going to get how I'm looking at the market, why certain things are important, and I'll answer certain things along the way. This is not me about to teach my model. This is about me teaching my processes. Okay? So hopefully you found this useful. Hopefully there were things you could take away. This is the first of many. I'm gonna get into the habit of recording these each week, put them onto the channel for you to digest, and you'll be able to see how even I evolve through the art of journaling. So hopefully you enjoyed. I'm going to leave it there, and I will catch you guys in the next one. Take it easy.